Hey everyone, in this video I'm going to highlight my top stock to buy now in May, and I'm going to reveal why I like this top stock to buy so much. So let's get right into it. Let's take a look at what the stock is, why I like it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, my top stock to buy now in May is Alphabet, and it's been Alphabet all year long actually. I recommended Alphabet as my top stock to buy for 2024, and I've kept it on my list as the top stock to buy all year long. So far, year to date, Alphabet stock GOOG shares and GOOGL shares are up roughly 19% year to date. That's compared with the S&P 500 ETF, that's up just 7.65%. So my top stock to buy has more than doubled the performance of the S&P 500 ETF, a strong outperformance to be sure. So here today, I'm reiterating that recommendation, highlighting that Alphabet is still my top stock to buy. I'm updating that recommendation today on April 30th, and you could see my list of top stocks to buy here. I have a mix of top 25 stocks, top growth stocks, top dividend stocks, and I update these frequently, and I let you know when I upgrade or downgrade these stocks all the time. So if you're not already subscribed, you can subscribe to the channel, and I usually show this list in every video that I do, and I talk about several stocks all the time. So please be sure to subscribe if you want more access to this list. Now, one of the reasons why I like Alphabet stock is because of the excellent performance. Now, in the latest quarterly update, Alphabet told us that they generated 80.5 billion in revenue, and that was up from 69.7 billion in the same quarter the prior year. And to make matters more impressive, Alphabet did this with roughly 10,000 fewer employees. Remember the massive job cutting campaign Alphabet underwent in early 2023? That's starting to pay off as their performance is improving. Now, the total income from operations improved from 17.4 billion up to 25.47 billion in that same time. So while revenue increased by less than 11 billion, operating income increased by roughly 8 billion. That's strong incremental profit growth, right? 11 billion in revenue led to 8 billion in operating income. That's strong incremental profit expansion. I love to see that from companies, and Alphabet definitely demonstrates that. Now, one of the bigger risks with Alphabet is its loss in market share as a result of the rise of ChatGPT. That's a real risk that shouldn't be understated, and I think they will lose some market share to ChatGPT as people replace some of those searches that they were conducting in Google search to ChatGPT. But Alphabet is firing back. It's launching its own large language model, and Alphabet's cloud segment is also benefiting from the rising effectiveness of artificial intelligence to kind of offset that lost market share in Google search. Of course, one of the bigger stories that came out of Alphabet's latest quarterly release was the initiation of a dividend. Now, this has been long overdue, but ever since Meta announced a dividend the previous quarter, I think Alphabet really said, okay, now we have to do it. We can't delay this any longer. The company generates roughly $100 billion in cash flow every year. And it's hard to use that cash flow and reinvest in the business because it's hard to find things to spend on at that scale. And so I think they need to return more capital to shareholders. And I was happy to see that. Not only did they initiate a dividend, but they increased the share repurchase program by an additional $70 billion. So at current valuations, Alphabet will buy back roughly $70 billion of its shares, or at least it's authorized itself to do that. And if valuations stay roughly where they are, I wouldn't be surprised if they indeed use up that whole 70 billion to buy back their shares. When a company buys back their shares, that reduces the total share count, and then existing profits go to existing shareholders, increasing the earnings per share because you have a certain amount of earnings and now you have a fewer amount of shares, and so the earnings per share increases, right? If the denominator decreases and the numerator stays the same or increases, you have a higher value for the outcome. And that's what happens when companies buy back their shares. And that's what Alphabet is doing. That's what Alphabet has been doing for a long time. Now, analysts that are following Alphabet stock, they expect Alphabet to increase its earnings per share by 18.4% over the next 5 years. That's compared to the S&P 500, which is expected to increase earnings per share by 10.92%. So Alphabet is going to increase its earnings per share by more than the S&P 500, by roughly 80% more than the S&P 500. However, its valuation is relatively cheap, trading at a forward price to earnings of 19.32 for the GOOGL shares, which are the ones that I recommend. I recommend the cheaper shares, not the GOOG. I recommend the GOOGL. The difference between these are voting rights and other corporate governance issues that I don't think retail investors have any difference in their value. I don't think that voting rights has any value to those investors that hold relatively few shares. They may have value for investors, institutional investors that have large blocks of shares that can influence decisions from the board of directors or influence votes for the board of directors, maybe voting in a person they wish to see on the board of directors and voting out somebody they wish not to be on the board of directors. But if you have 100 shares or 200 shares, you're not influencing anything at the company. And so I don't think you should pay up for those rights if you don't have them, or if you have them, I think you should just go with the cheaper version here. Although it's not a big deal, either one of these shares I recommend as a buy for long-term investors. Now, I reiterated that the stock price has performed relatively well against the S&P 500, but that doesn't have to be the case. This can reverse over the rest of the year, and there's been moments where the S&P 500 has outperformed Alphabet stock. You could see that in March, right? When I made this video in early March, I was telling investors that so far year to date, the S&P 500 had outperformed my top stock to buy recommendation, because at that point in time, the S&P 500 was up about 9%, while Alphabet was down on the year around March. But there are moments like right now where it's outperforming the index. And in my opinion, to start the year, I felt that Alphabet would outperform the S&P 500 index. So I still expect it will end the year outperforming the S&P 500 index. Even as today it's already outperformed, I suspect it will continue to outperform because I think Alphabet's prospects are better than the broader market overall. So for all those reasons, I think Alphabet is an excellent stock for long-term investors to buy today. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.